There we go. All right. What's up? This is Nova. Welcome to Insider Trading. I love this music. Yo, I'm eating right now. I had a long day. Worked out. Talked to a couple of my cousins and my aunt. I hadn't talked to in years. Feels so good. I hadn't eaten. So, you're just going to get the real me. I'm be eating and talking at the same time. So, some background real quick. Trading, teaching, studying daily, every single day, 8, 10, 12 hours, 12 plus years. I've tried to add it up. It's like 20,000 hours. I've taught middle school kids. I started with middle school kids. I've taught kids in high school, not a ton. I want to do more of that next few years. Adults at every level, options, futures, long-term investing. Most of my time has been long-term investing. I wanted to patiently wait until I really could say I had mastered trading. And I would say it took a decade. So that's perspective for all of y'all who want to get in and think this thing is going to be fast. I don't know about that. It takes time. It really does. It really does. So, Insider Trading is actually a group on Facebook that my cousin and myself, Joel Harrison, shout outs to Joel, celebrating, what was it, 18th wedding anniversary? That's what's up, man. Black love. Real love. Him and Zing. What's up, y'all? But yeah, me and Joel started Insider Trading, which is a Facebook group, like 10 years ago. It was just me and him trading, day trading futures, and didn't have anybody to talk to about this stuff because nobody we really knew was trading and making money this way. Now the whole world has kind of cracked open a little bit. COVID brought a lot of y'all in. It's a free group on Facebook. It's like 30,000 people. I would say it's probably the best group on Facebook. I'm biased, but no other group does these types of live interactive trainings and sessions from two real day traders and investors and swing traders who can really literally trade anything. So, but I'm biased. So let's do this real quick. This is interactive. I want to let you know that I can actually interact with you. So type in, let me know where you're from. I'm in Atlanta. I'm from Gary, Indiana. Shout out to all my IU Hoosiers, all my Clark Atlanta alumni. That's where I got my MBA. I'm gonna even say shout out to all my people working at Bank of America, even though I don't work there no more. That was my first 6-figure job. Thank you, Bank of America, for letting me know 6 figures wasn't enough. Thank you. Where y'all from? Let me know. Also, what I'm going to do tonight, as always, we're going to look at the market. We're going to look at what happened today. Probably maybe pull up some futures. Show you a couple things. I got a few folks who also, if you're in insider trading, before I go live, there's always, I'll always let you know I'm going live like hours before. And then say, yo, give me 2 stocks. I'll analyze your stocks for you. Something that a lot of folks, just kind of, some of your gurus don't do. Won't even attempt to do live on the spot. Somebody said thoughts on SPY, which is Spiders, S&P 500, the ETF. We can look at that. Thoughts for the rest of the week. Somebody else said Atlanta. That's what's up. Okay. So, as the music slowly fades to nothing, let's go. Let me pop this up real quick. Let's go here. Actually, yeah, I'll go here. Excuse me. So let's do this real quick. I'll go to Spiders first. Go to Spiders first. And this is a quarterly chart. Let me get rid of this information up here though. So for those that don't know, because I always want to educate, what is S&P 500? What is the Standards & Poor's 500? It's the benchmark. It's not the economy. People think stock market is the economy. The economy can be bad. Stock market can be cruising. They're not perfect. They're not like It's not 100% correlation. It's not. It's not. You saw that with COVID. Things were getting worse. People not working. Jobless claims going up. Unemployment, right? Inflation. Market was going higher for a good period. Now it's connecting a little bit better. But the S&P 500 is basically 500 mid to large cap stocks, some of the best stocks in the world. Essentially, if you name it, it's probably in the S&P 500. I would say, because there's a lot of when we start talking about selecting stocks and what to invest in, simple rule of thumb, if the S&P is the 500 biggest best, it's the broad market, it's the benchmark that we compare everything else to, right? Is the S&P. Then I would say if your stocks aren't in the S&P, that's probably a problem. Now they may be small cap, it may be just a newer company that hasn't grown its market cap. It's not as big as dominant yet. So I get that sometimes that's a great long-term play. But a lot of you guys make mistakes by just thinking you're great at picking stocks and you're not. It's actually incredibly tough to do. And a lot of people who brag on being amazing stock pickers and investors can't actually show you 10, 15 years of results, right? They can't. And here's the thing, Google it if you don't trust me. This is what the statistics say. If you go to there's a couple different places to find it, but S&P actually has a lot of research. Standards and Poor's has a lot of research, right? What I always like to say too, what the heck was that? Yeah, that was weird. It's like a shot. And I got a window right here. Let me get out this window. I might have to shut this down. I don't play around. And I live in a nice neighborhood. Well, maybe that wasn't a shot. I don't know what that was. That was weird. Anyway, okay. So S&P 500, it's like I always teach this for my kids, right? The simple way to think of it, it's the all-star team. It's the all-star team of the stock market. There's thousands of stocks you can buy. But if you wanted to invest and bet on the best, right? The S&P is one way to do that. It's one simple index, a way to literally, it's a portfolio already made for you. They kick bad stocks out. Oh, it's fireworks. Fireworks. I hate when people do that. It's like, why you didn't light them all yesterday? Now you got me sitting here thinking I'm about to get shot in the window. Even though this is a nice neighborhood and that would never happen, but still. See what I'm saying? Look, man, if y'all got some fireworks, finish them off tonight. All right. Anyway, but the S&P is a broad market index standard 500. Portfolio design for you. Here's the thing. If you go back over a 10 to 15 year period, 96, last time I checked, this was a stat, 96% of managed funds, somebody like me with several degrees and certificates and licenses and a whole team of analysts helping them to analyze and pick stocks for you in mutual funds, ETFs, right? Any sort of fund, these fund managers over a 10 to 15 year period, 96% of those managers cannot beat the S&P. So why do people think you could just hop in this and start picking stocks and be an amazing stock picker? You probably over a 10-year period would have made more money if you just relaxed and put your money in the S&P. And I don't recommend the S&P. Why? Because I'm all about performance. What the data shows, there's actually two. The only one you really need to know, I'll say, NASDAQ outperforms the S&P, probably beats 99% of all these funds and fund managers over time. Now, I'm not saying that's the only way to invest. I'm just giving you that because it's based on data. It's not Noble's opinion. If you don't trust me, look it up, find out for yourself. Most people are terrible at picking stocks because you don't know how to read a balance sheet. You don't truly, right? Like if you don't really legitimately love business, accounting, and understand like the fundamentals and like really how to dig into the numbers, you just like your favorite company. A lot of people like stuff for whatever reason. Right? How do you know it's a good company? All right. Got to be more than it's popular. It has to be more than I like it. It has to be more than an emotional appeal. It has to be even more than, oh, the chart looks pretty. Well, it looks like it's going straight up. It's probably going to keep going up. Because that's what people said about Peloton, Clorox, Zoom. Matter of fact, let me pull up those three real quick, just for fun. Zoom. Look at Zoom. Go from grace, fast, hard. All right, I'm gonna go to the month chart. All right, let me get all this off my screen. This is the month chart. Take a look at what happened. Look at that. COVID was back here. March of 2020, we ran up. What percentage was this? 490%. All right. A lot of people thought this was a great investment. No, that was a great trade. It was very situational. People were getting on Zoom. Zoom was getting a ton of buyers and new customers because everybody was at home, schools, everybody was trying to figure it out. It became a staple go-to. Everybody's on Zoom. Right. But that does not mean that it was actually a good company. It doesn't mean you should have been investing in it. I tried to tell people this. If you're insider trading, you know, you never saw me recommend any of these COVID stocks ever. Ever. I never said these are great stocks for you. No, I didn't. If you're not a trade, okay, cool. Because volatility, yeah. If you're talking to Trader Noble, yeah, I just want volatility. And even then, I'm still gonna trade the best stocks. Right. So how much did it fall from grace? Looks like we dropped about 89, 87%. So think about that. Folks who don't know how to read a chart, who could not have identified that right in here was just like the market was telling you, I'm either going to break out of this little range, I'm going to go higher than 430, or we're going to finally close and go under 300. We went under 300 and it was over. Just straight down. Easy to see. So nobody should be losing money right now on Zoom. Nobody. But we just jump into this thing like it's easy. Look at that. We came right back to where we started. All the value that it made during COVID has literally come out of this stock because it was never there in the first place. All right. I hate to beat up on Zoom because I use Zoom for my business, but it is what it is. Peloton, real quick. Peloton's lower. Peloton's lower now than what it was before COVID. Think about that. Great companies do not become great because of a global pandemic. You're still the same company being ran by the same business leaders. At the core, it doesn't mean the business has changed. You just have much higher demand, which equates to sales and revenue, but it still doesn't mean the business actually became healthier. Doesn't mean that you were going to be able to actually dominate in that space. Other than for this little 18 months where everybody was trying to work out, and now people are getting back outside the house. Right. And the stock price reflects that. Sorry. All right. So, once again, to keep it simple, I think your stocks, if it's not in NASDAQ, it's not in S&P, that's already a little touchy. Right. And if you don't legitimately have a love and deep interest in studying companies and specifically understanding the fundamentals, we could talk PE ratios, inventory turnover. We could talk about the stocks, just all the stuff people don't talk about. Like we just like pulling up charts and acting like that's it. That's not it though. That's not the whole game. That's not. The charts are great. That's forward looking, but you need to make sure it's a solid company. All right. So gotta do that. Let's go back to the S&P real quick. Well, this is S&P. Since here's the crazy thing. Let me do this real quick. I do this all the time, but I mean, this right here, .com bubble bursting. Bullish market for about 5 years as the market recovered pretty much to the same place. The recession came right back down. Recession of 08. Right back down to these exact same lows. All right. It's called a support price. Really smart investors start loading the boat down there. And you could have kept buying as it went down. Why? Because 12 years later, right? This is how you got to think as a long-term investor. So many people right now are just getting frazzled and beat up. And it's only because I don't say you started late. You don't realize that it's a long-term game. It's a long-term game. That's it. Right. So as bad as the recession was, look at the 12 years after the recession. All right. So imagine the recession of 08 making you think this investing thing doesn't work. It's not legit. Prices went too low, and you get fearful, you get scared, and you did not, because many of you did not just put some money in the market every month for the last 12 years. Well, oh eight, what is that? Uh 14 years, last 14 years, oh eight to now. You missed a hell of a lot of money because the market was very bullish. And bullish just means people are buying, the trend is up. All of your favorite stocks that are in NASDAQ and S&P, generally speaking, have done well. Right? COVID was right here. This is probably the steepest uptrend we've seen in 30 years. Right? Crossed over that trend line last few months. Struggled in here. What is that? February. We started coming down in January. It's been a tough year. Markets down. It's nothing you can per se do because all the best companies in the world are feeling the same thing. Right. So one simple piece of advice is make sure you remember that long-term investing is just that, is long-term investing. What if the market continued to come down for the next 7, 8, 9, 10 months? What are you going to do? Because there's a really, really good chance. This is the statistic you need to know. The biggest gains in the stock market come 3 to 4 years after the biggest losses. After the biggest losses, the biggest gains, right? Going back 125, a little bit over 125 years, right? You need to know those little statistics. Just keeps you safe, keeps you not panicking too much. And I know people right now are trying to like find the, like, should I go to Dollar Tree? Should I, like I see all these gurus giving like little tips, and it's like, you gotta be careful right now. There's a lot of people trying to sell y'all on like just throwing out stuff, telling you to buy it and you should be invested. And it's like, it's long-term perspective. It's still long-term perspective. The best companies in the world right now are still the best companies. Yeah, they've lost market value. Sure. Yeah. But that's just part of the cycle. It's what happens. Once again, that's why I love to show the S&P and go back. Because we roughly had 19, 20 something bad months during the recession. 20 bad months, 2 bad years. And then 14 years of amazing. Right? So a lot of us let the 2 years mess us up, and then we missed the 14 years that would have made up for those 2 hand over foot. Right? So I'm showing it to you. I don't want you to miss it. I'm showing it to you. Let's see. Somebody said fall from grace. Yeah, I think that's when I was talking about probably talking about Peloton and Zoom. Yeah. Somebody said, Dr. Chaz, I have learned a lot from you and Joel Rodney Harrison. Thank you. That's what's up. That's what's up. Appreciate that. Joel, I'm speaking on behalf of Joel. He would say thank you too. Christopher John said, hey, Nova Woods. What's up, bro? What's up, bro? How you doing? How you doing? So let me do this. Let me hop over to I'm on the S&P, but let me do this for those watching. It's always a good review. I can never really do this too much. And here's the cool thing. If you actually, I don't even want to toot my own horn, but I am going to do it real quick. if you were to go back and watch all of my videos back to like November on my YouTube channel, Just Being Noble, or is it just being noble? I think it's being noble. I'll be forgetting anyway, being noble. What I showed you was this. Cover it real quick. You got to see these ranges. The market gets stuck. And think about it. It makes sense. Prices drop or something good or bad happens, whether the catalyst is positive or negative, something happens, we all react. And then we all get a little bit like, is it going to keep going up? Is it going to pull back? Right? Is it right? And even these big, huge hedge funds do that. Right? They're not always buying. Right? Sometimes there's just these periods where we really don't know. Everybody's kind of just volumes a little lower, indicators stop working because a lot of them are based on volatility. When you don't have volatility, a lot of these indicators y'all using it because you haven't really studied them deeply. Some of them just give you a lot of false signals when the volume gets low. So what do you do when the volume is really low? Market isn't going anywhere. Your indicators are kind of giving you fake signals. You're losing a little bit more. Like, what do? You got to realize you're in a range. It's literally it's 101 and 501 level advanced at the same time. It's super basic and it's also super advanced at the same time. Because across everything you can trade on every time frame from 1 minute to quarter, you're going to see these periods where the market does not know which way it wants to go. Nobody's willing to bet to push it to either side. And we get ranges. And then we break out of ranges. So I'm gonna go back real here. Go back real here. I'm gonna go back here to this 2 week period right here. This was November, right here. All right. It was these 2 weeks at first. All right, think about it like this. Let me zoom in a little bit. Let me zoom in. Let's go back in time. So it was these 2 weeks. We're waiting for price to hit 475. All right. Another week. Oh, right. So now we're kind of paying attention. We got a high, we got a low. All right. We're not really going anywhere. All right. Next week. So we pushed up, we pushed down, we pushed back up. All we doing now is seesawing. Right. This is when markets start to tell you I'm getting slow or I'm getting sluggish. I don't know if I want to go up. I might pull back. I don't know which way I'm going. I'm getting tired. It's like momentum slows down. Momentum slows down. Right. Next week, what happened this? Okay, cool. Okay, we got a week. But if you know how to read this candle, that week has a little. It's a positive week because it's green, right? So we pushed up, we pulled back, but that wick in a range like this, I'm gonna extend this a little bit more, is really, really telling. And if you really had some just slightly more advanced level skills, which will come in time, so I'm not beating up on you, but if you had those more advanced skills, this candle alone should have told you this. Here's instantly what I'm thinking. When I see a candle like that in a range, if price comes under this candle and we pull back to 470, that means we probably didn't have enough momentum, enough gas to really take off. All we're probably about to do is come right back down to the bottom of this range, 450. Without thinking, every time I see this scenario, which you see all the time on a lot of stuff, right? If you see the pattern. And then what do? We pull back. Little rangy candle. Came right back down. Right? This candle right here. December 27th. That week, the very next week, we tried to go higher. We went literally, what was the high? The high on this week was 479. The next week, we went 98 cents higher. When the market literally can't even push $1 after ranging and being really tight, it's telling you it's weak. Oh, it's screaming I'm weak, and I don't have enough buyers. We don't have enough buyers, right? You need buyers for markets to move. You need buyers. Let me find my little my bull sound. You need buyers. You need this. You need people buying continually over and over. That's not what we had. Right in here, that little 3-week period, we pulled back, we cracked under 470. We had this little week, January 10th. We kind of pushed up, we pushed down, kind of like a confusing candle, right? I'm literally going candle by candle. This week here, when we closed under this range, we closed under that range. That was it. Like if you didn't see that, that should have instantly told you, let me just relax on buying everything. And I know people love to say buy the dip. There's a pro and con to that. There's a time to buy the dip, and there's a time where you definitely shouldn't per se buy the dip unless we're talking long-term investing and you're just adding and building equity. You're adding to your whatever stocks you buy monthly, right? But if we talking technical, we getting technical, and this is technical analysis, looking at the charts. We started to develop a downtrend. And let me show you that downtrend real quick. Nice, simple, and easy. All right, look at this. This was the up. I used to have to do this when I first started trading futures, right? Because I would get confused sometimes on like, what's the direction? So I would draw these little swing lines just so I could kind of keep things in my head really, really clear. All right. These two candles right here, what is that? The week of January 31st and February 7th. These are screaming that the market is probably about to come back down. Right back down to this 420 area. After we couldn't get through this period from 1, 2, 3, 4, 5, 6, 7, about 8 weeks. For 2 months, the market didn't go anywhere. It was giving everybody time to analyze this. Everybody. It gave everybody enough time. Sorry, it did. All of this was very much so logical, predictable. These patterns just make sense. Um, and you don't have to be or try to be some, guru who's predicting the future. I don't try to predict the future at all. That's not what I do. I just try to read the chart and be as honest and objective as possible. If you go back to my videos, you'll see. You'll see. I've been saying the market's down since January. All right. We broke this low. We pop back up. All right. Where is it going? Okay. Got a little push here inside this candle. Look at this. This week right here, screaming. This is essentially like a bottom tail hammer. It means price pushed all the way down. We had a lot of buyers get in. Good sign. But does it mean the trend has changed? Are we kind of back strong again now? Should you be buying? Maybe not. All right. I don't even have any indicators on here. If I put some indicators on here, right, it definitely you would have known to like just relax for a minute, right? We pushed back up again here. We ran to this same area of 460. Let me see. Hopefully you can see that the market does this all the time. So you should have noticed this even this week of 328, March 28th, when we pushed back up. You should have been able to say, oh, I don't know if we're going higher. The last time we hit 457, 458, we couldn't go any higher. This candle right here is telling you it's a candle saying that the market was weak. The next week we broke the low of that candle. It's the same basic pattern. We're coming back down to the same low, right? This is how these downtrends develop. That's all it is. And people say buy low, sell high, right? Because when the market is selling off, you actually want to short it after these moves that push up when bulls are attempting to take over the market. But the main trend is still down. The probability is on your side. But you got to know how to, right, when the market is long, short, and when we're in those in-between periods where you literally just need to relax and just take a breath. Right. So where are we now? Just keep zooming over. Check this out. So here's where we are now. Had a little push up here. Couldn't get any higher. Strong right here this week. What is that? 6-6. June 6th. Strong reversal. Push back down to the bottom. Made a new low. And it's not like the all-time low or nothing like that, but new low, right? And so last 3 weeks, we are inside of a good candle, which tried to go higher last week, but really didn't. And this week, we're basically just in this range. All right. So we're right here. We pushed up. Today was a good day. Let me show you today on, let's go intraday for a second. I'm gonna show you today on a 15-minute chart. Look at today, 15-minute chart. Look at today. Look at this morning. Same thing, ranging. Look, very first 15-minute bar, right? From the high to the low. Look at that. Just dancing on 374, 372. Push back up to the high of that bar. Oh, came right back down, right? Oh, it looks like we're about to drop again. Hit these lows, tested these lows down here. Right, tested this low, got there, got close. Never broke the low. Pushed all the way back up. When we didn't touch this low at 11 o'clock, think about this. Market starts selling off from the beginning of the day. All right. Tries to push a little lower. Oh, strong candle at 10 o'clock. 10:15, kind of sitting there right in between. Let me zoom in on this a little bit for y'all. All right, 10 o'clock, right? 10:30 right here. We push all the way up. Nice push back down. We didn't have enough bulls. You would think, oh, we're just about to drop again. When we pushed here and got to this low, but did not break the low. If you're an advanced trader, that's screaming to you, we don't have enough bears. We don't have enough bears. When we get that close to a low and can't even break the low. Come on, man. That's easy stuff. Should be, right? For my day traders, which is why day trading is hard. You gotta know this stuff off instinct. You don't have time to sit and think. You gotta know it. You literally just have to know it, right? We slowly push back up. And check this out. We got to back, we broke outside the range. All right, peep this. Got outside the range. And then what happened? We ranged inside of this candle for about an hour. Right? 30, 45, hour 15. And we finally got above that. Market was all good. Rest of the day was nice, clear, going straight up. All right. So today we had a bearish move at the open. Bears were trying to hold and keep the market down. All right. I'm gonna draw my little swing lines. We bounced. Bounced back here. So this was the day. Right. A lot of struggle all the way till about 12 o'clock. Most traders are probably done at 12. This is actually, if you think about it, this is why the end part of the day became so smooth. There wasn't a lot of choppiness. There wasn't a lot of fighting. Most people are done trading by 1 to 2 o'clock. All right. So a lot of times you'll get these real nice, smooth, easy moves later in the day because all the fighting and all the aggressive back and forth is done. All right. So let me find real quick. Let me try to find the post that I made with my folks in the room so I could see. I could try to find what stocks I was supposed to be looking at real quick for you guys as my people light up these last fireworks. Oh, okay. Not a lot. All right, cool. So let me go back to the S&P real quick. Let's go back to the week chart. So, matter of fact, yeah. So, different view, a little more advanced. I'm not about to explain it. I teach all of this in a class. I'm not about to explain it right now. Plus, if I told you, like, it's too much to explain off the fly anyway, right? So, market is still bearish. We're not. I know people are thinking and saying for me, nothing's changed. We're still bearish. That's it. That's all I got. We're still bearish. Nothing amazing has happened. We're still bearish, right? Defense, right? If we're talking investing, right? Some of you guys are probably in stocks that really are going to do much worse as we roll into a recession. I say assuming that will happen. I did a video maybe like 2 weeks ago. Go to my YouTube. You'll see it. It says recession something something. I already showed you the levels where if we repeat the recession, we already know where we're going. I already know. You can watch the video, analyze the lie. Right. Just tools, once again, practicing giving you the technical skill set to make sure you see things the right way. What's the worst that can happen? The worst that can happen is essentially we have a 50% pullback, which is basically what we had during the dot-com bubble and the recession. It was a 50% pullback. It was like a 53, 57. Right now, we're like, I don't know. Let me check. How much percentage pullback are we at right now? We're not there yet. But if we do that same kind of move, it's essentially we're just going back to pre-COVID lows. We're going all the way back to before COVID took off. We're going to take all that money back out the market. Psychologically, it's going to mess up some of y'all. Some people going to give up on this investing thing. Might even go lower, but I'm telling you guys, it's a long-term game. If the world falls off a cliff, none of us can do anything anyway. All right. So if you're going to subscribe to these principles and tenets of investing, you got to keep investing. And once again, 3 to 5 years after the biggest losses are when the biggest gains are made. All right. Let's see. I was trying to figure out what percentage drop we at right now. This low is about 24%. 25%. So yeah. Nothing crazy, honestly. 20% is a correction. We went to 25. We roll into a recession. We start to develop a downtrend on the month chart. I showed you the week chart. We're in a downtrend on the week chart, the day, everything else. We're not in a downtrend on the month chart. That month chart goes into a downtrend, full-blown recession. It's possible to get a full 50% retracement and come all the way back. It is. Happens all that. I mean, it happened literally. I can go back and show you it happened. But watch that video to see it. I don't want to do it all over again. My guy Andre Swanson, what's up, bro? He said it's 15-minute chart better day trade because it gives you better indicators than a 1-minute chart. I ain't gonna lie, man. The best time frame, if you really want to see the direction for intraday, is 5-minute. I say that as somebody who has traded every time frame. Uh those early years, man, me and Joe, we've traded ticks, Heikin-Ashi, whatever those are called. We traded 1 minute, 3 minute. You can go on Thinkorswim, you can customize. I've traded 7 minute charts, 5 minute, 10, 15, 30. At this point, I honestly kind of see everything the same way. Right. So when you start talking to me, it's tough because I could literally get really I could really layer it in. The simple, nice, cute, little easy answer is the 5 minute gives you the best indication of when a trend is going to change, because in the intraday game, we can be bearish for an hour and a half, and then we can be bullish for 2 hours, and then towards the end of the day, we could be bearish. Like, right. So you have to know trend changes and when the market is kind of stuck, so you can just patiently relax, right? Intraday, it requires more skill for that reason, those reasons. I could use technically any time frame, and I understand like what's happening on the 5 minute when the 1 minute is doing something. Right, man. In fact, let me give you a quick little example. Quick example. Just real quick. Real quick. Check this out. We'll go to the 15-minute chart today. Right, today. So peep this. This hopefully write this down. Like this is like the insightful type stuff that you don't find free. You really don't see a lot of people talking about, some of these people can't really break it down and talk about this stuff, but this move here, right? So I'm on a 15-minute chart. 15-minute chart. This little pullback right here, right? When we broke the low of this candle, right? So let me zoom in just a little bit. Peep this out. Check this out. We broke the low here. We broke the low of this candle. And then here we broke the high of that candle. So what I'm going to do is I'm going to put a little bar right here when we broke the low. All right? And I'm going to copy that bar, and I'm going to put another bar here when we broke the high of that candle. Right? And then what I'm going to do is, so without looking at the 1 minute, I know what the 1 minute is doing on the 15. All this is right here, this little 30-minute period right in there, that on the 1 minute is a short-term downtrend. Any indicator you're going to use, if it's a decent indicator, it's bearish for these two candles. When we broke the high of that 15-minute candle, it's the 1 minute reverting back into the uptrend, connecting back into the 1 minute is bullish, the 5 is bullish, the 15 is bullish. You only get these really strong moves when all of these time frames align, right? That's what it is. When you get these trending moves, the 1 minute is bullish, the 5 is bullish, the 15 is bullish, the 30 is bullish. Now we go to the hour, 4 hour, that's right. That's kind of long, right? You only got a certain amount of time during the day. But that's essentially what's happening, right? So let me do this to prove it real quick. So if I go to the 1 minute and I just find that period, let me zoom over real quick. That period right in here. Right. So I'm going to pop on one of my favorite indicators. It's called the TTM squeeze. Which one is it? Oh, live class. It's this one. Oh, wait, hold on. It disappeared. It's right in here. Right. So as it was breaking this low, right, we are in a downtrend on the 1 minute. So technically, if I was trading off the one, I should have been short right there. That was a chance for me to make money down. But the 15 and the 5 and the hour were bullish, right? So do I want to use the one to catch this little short-term downtrend, or do I want to relax and kind of wait for the one to realign with the 5 and the 15 and everything else? Because once again, markets only move and are really strong. Like you only get those strong pushes when all the time frames align. All right. And notice how this is green. This indicator is basically saying that the market on this specific time frame, this is a bearish, all right, this is a bearish move. Squeeze down here is red. Then here's where we broke above, and look at that. We broke above and everything turned blue. Oh, look at that. The squeeze reverted back bullish, right? So when you're talking to me, I could work these time frames inside and out. Like technically, I could take a trade almost in any direction. Right. I mean, you can too, but it takes years. I'm not going to even play. It takes years to get to that level of insight and skill set to be able to look at the 15 and know what the 5 and the 1 minute are doing without even looking. Right. And to know when it's best to, wait for that alignment. All right. I said today, I made some money today. And I said I took a long, I made money on a long early. It was that pop that went back to the high, right? And I said it was technically a counter trending long trade in a down market, but you could do it if you know what you're doing. Right. So you can really go any direction at any time. Just depends on how much you want to make. All right. Ranges. What's the average range? How much can I get off this move? How much does this thing move generally? And then what's the real trend? The 1 minute is just, 1 minute, you never like you have to look at something else to know the real trend. I think the 5 will keep you safe. So super long answer, but oh, somebody said we can't see charts not showing. Dang, all of that. I did all of that. Okay. It's cool. I got y'all, man. I'm gonna go back. I'll go back real quick. Don't worry. Don't worry. I got you. I got you. All right. Well, at least you heard it, right? So now I don't really have to I don't have to like go back through it hardcore. Okay. I'm gonna do it real quick. So the 15-minute was here, right? And matter of fact, let me make it clean. So right in here, this was today. Those two time frames, right? So 12:15, we broke out of the range. That means something to Noble. That's like, yo, bulls are taking over. Probably. We still could have dropped. You don't know, but probably, right? Everything's about probability. When we break out of a range, whichever direction we break out of, if we close above that range, that means people are buying. All right. So for these two bars here, 12:30 and 12:45, we did not go any lower than the 12:15 candle. We broke above, and then the market said, "Oh, do we really want to push? Are we gonna go? Are we gonna move? What y'all thinking? Y'all gonna buy it? You go right? It's just like a big, I don't even know, swap meet, right? Everybody's trying to decide what are we going to do as bulls, right? Because this at 12:15 was a stake in the sand. Right, this was a message to the Bears, like, yo, we're here and we want this money. Bears now have to do something, right? When Bears don't do anything, Bulls get clean, easy moves. Markets just trend when there's no resistance, and there's just buying, right? So what I did was I said, here's the thing. I put a bar right here, this blue bar, under this candle, and then I put a blue bar here when we broke the high of the 12:45 candle. So think about that. Matter of fact, let me mark it off. I'm gonna put a breaking low, and then I'm gonna copy that real quick, and I'm gonna put breaking high. Right. We broke the low and we broke the high. Well, on the 15-minute. But if I go to the 1 minute, I go to the 1 minute. Where's it at? I go to the 1 minute right in here. Right. So this is a much smaller microcosm, same thing. When you go to these smaller time frames, you just have to literally be that much faster. You can't think. I tell people all the time, the 1 minute is super fast. You got to know what you're doing. There's no thinking when you day trade. If you're thinking, you're gonna lose. You're not gonna make what you can make. 5 minute, a little more time because there's 5 minutes, right? 1 minute might give you entry bam. It's like in 1 minute, you gotta make the decision. You can't sit there and think about it and pause and all that stuff or emotions hitting you. 1 minute ain't for everybody. It's literally for professionals. Probably I won't even say professionals because technically I'm using all the time frames, really. Right. But I understand how they work together. So here's what I did. Where's it at? I'll do it this way. This probably is easier. I'm gonna just put it on fresh. So TTM trend. Now this is ugly because this is just the indicator itself, right? It's kind of ugly. Let me change that blue to green real quick. So what this indicator is saying, as I was saying, this indicator will it will color your charts and tell you the trend direction. And it's really, really, really accurate. I love it. All right. So I'm gonna make my trend up green, trend down. All right. So as we were breaking that low, see how all these 1 minute candles are red? All right. This was a short-term downtrend on the 1 minute. So if I was trading the one, you could have made some money to the short side right here. All right. But if you wanted to align, right? You only make money when the 1 minute is like if we're bullish, you're only making money when the 1 minute is going up and the 5 minute is going up and the 15 minute is going up. That's how like so it's I know we have multiple time frames intraday, but it's really all the same thing. There's one market with one price that's making these fluctuations. What almost nobody teaches that is really complex, so it just takes time to learn. It's really not that complex, but it just takes time to learn. Is how all of the time frames literally mesh together. It's not really even hard. I mean, easy for me to per se explain. I'm trying to do my best in this moment, but so when we broke the high of that 15-minute candle without looking, I know Noble knows if we're breaking highs on a 15-minute candle after a little small pullback, all that means is that the one and maybe the five had a little pullback. The one was probably bearish, actually gave you multiple red candles. And then once we started pushing back up and broke the high of that lowest 15-minute candle in this range, the 1 minute was bullish, and the five was bullish, and the 15 was bullish, and the 30 was bullish. It's the only time you get these strong trending moves. Everything's moving the same direction, right? You can't have a downtrend on the 1 minute and an uptrend on the five. It doesn't align, right? And so look at the rest of this move, right? Look at the rest of this move. It just pretty much stayed green. You got these little pullbacks, pop right back up. Little red, pop right back up, right? This is when now at the end of the day, no bears are really trying to stop this run. This is just bulls taking some profit. Let me take some money. All right, this is just folks taking money, getting back in, taking some money, getting back in, taking some money, getting back in. That's all that's happening. Dang, I did not mean to make today like a day trading thing. So this is the 5 minute. Peep the five. All right. Got a little bottom right here. That's all. The five. Look at the five. Look how clean that is. We didn't go anywhere. Let me zoom back over. Wait, where is it? Where'd it go? Oh, there we go. Right in here. Right in there. Look at that. We just trying to break. Oh, we don't have enough bears. We ain't have enough bears. We ain't go nowhere. Right. So you can see that we didn't go anywhere. Right. So it's the same thing. This is a little small range. That's all it is. A little. I'm trying to grab the box. So you got that first little red candle, and then we pushed down, and once we got above that, we went right back into the main trend. But before we could go higher, the 1 minute is turning red. I'm sorry, the 1 minute is turning green. Then the 5 minute is turning green, and the 15 was already green. And we push, markets push when all time frames align. That's like 101 and 501. So hopefully that helps. If not, I got something coming. Been working on. I'll be real with you. I'm gonna tell y'all what I'm doing. I'm working on right now a class that will be such strong, advanced, but still simple, well broken down modules. A lot of learning tools, checklists, little homework assignments, quizzes. Right, a really, really, really like literally best class out. Because what I do, you can trade using options. You can trade it on futures. You can trade it on foreign exchange. If you pull up crypto, crypto is a lot of people be buying crypto and don't even have a chart, which I'm just be like, I don't know what's going on. But it doesn't matter what the asset is. Like a trader should trade anything the same way. And if you can trade futures, you can trade forex. If you can trade forex, you can trade options. Now options is a little because of the math and all the terms and all that. So it's different, but I'm just talking about a chart, right? I'm talking about a chart. It doesn't matter what the asset is. Every chart is the same to me. Right? So hopefully that helped. Oh, I had a few stocks to hit. Where'd they go? Oh. My guy Charles said, show us the chart, bro. My bad, y'all. I'm sorry. You know, I wish this thing would like ping or ding or something. When people are writing, y'all, the comments pop up, but I don't like know unless I'm looking in that corner. So my bad. I hate when I do that. I do that every now and then. I hate when I do that. Let me see. Let me find those stocks real quick though. CRM excellent. Okay. Matter of fact, let me go back a little further. So what I recommend, and I'm gonna take all this off because I don't know who I reviewed this for, but I don't even want no muscle memory to kick in. Because I usually will remember what I said and I won't even have to analyze it like live, right? So, oh, and then let me take that TTM trend off. So you just got a clean chart. Bam. Basic chart, green is up, red is down, month chart. I always like to, this is a CRM Salesforce. I like to start with the month. Why? Because it's bigger, longer term view. Why would I jump into a day chart if I'm analyzing? Why? Why would I do that? It's just like a relationship. I don't care what you did yesterday and today, right? I want to know who a woman is over time. Are you peaceful and patient and cool over time, or were you just like just last few days you've been cool, but you something to work with, like you a mess? I don't want no mess. I don't want all that drama. You got to look at the longer picture, analyzing anything to make a decision. Time matters. So why do so many of y'all go straight to the day charts? It don't make sense. It really doesn't. You can apply that to everything. So here we go. I'm gonna draw one little line down here. Ew. That was the low of COVID. That was also the same low. Think about that. This has now bounced off this area. Well, it bounced once, right? But imagine if during COVID, right, you knew to look back at the main last low because Noble told you to look at the month chart. Where's the last major swing low? Matter of fact, let me draw the lines real quick. Where's the last major swing low? All right, it's right here. All right, so you kind of had two, right? You had this little poke right here, and then you had this one down here. Imagine if you'd have been like, you know what? I love CRM. I think we'll get through this. I'll buy some at 140. If it gets down here to this 120 area, I'll buy some more. Look at that. You would have caught this entire move back up. Ooh, with options? Oh man. Giving it a little time? Now I know. I know. We can't go back in time. You probably would have been scared as hell of COVID because COVID was scaring everybody. I get it. Right. But the best trades are generally made when everybody else is panicking and freaking out. It's buy low, sell high. For it to go low, price has to go lower, right? So okay. Strong candle here, August. We ranged inside of August for a minute, and I want y'all to see that real quick. Look at this. Look at how we made this little high. All right, look at that. I could put a box over that candle right there. It's the same thing. All right. We tried to go higher, we couldn't. We tried to get back here, didn't touch the low. Okay, cool. Still bullish. Really, all of this to me is one long candle, right? So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. These 14 months to me are literally one candle because we didn't go anywhere. All right. So until we break this low and or close above the high of this candle from August, to me, to Noble, all these little candles in here are just noise. They don't really matter. This is the market trying to figure out where to go. All right. We broke outside this high of October. November was here. We gapped down on the month in December. If you have been paying attention to the S&P, what I showed you earlier, S&P, NASDAQ, everything froze in November and December. It started coming down in January. You already knew where this was going. It was coming back down to the low of this range. All right, so we got there. Ooh, little doji candle here in March. Let me zoom in on that. A doji candle here. And then we closed under this range. All right, under this range. So all of this buying, think about it. When price was here at 180, we now have anybody when price hit it's 175, right? So April, at the end of April, when CRM was at 175, people who had bought, matter of fact, let me draw this line real quick. Draw this line. Right? We took prices all the way back to May of 2020. All right, the last time we saw 175 was May of 2020. Then we went all the way up to 311 and then came all the way back. So that's literally anybody who bought in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 23, almost 24 months. This move here basically erased 24 months of gains. So where you think we going now? Because the S&P and NASDAQ is only at like 25%. If we go lower, where do you think CRM is going? It's on the chart. It's staring you in the face. We're going back to support. Where is support? Down here near 120. We're going back to the pre-COVID lows. That's all we could do. All right. That's CRM. Oh, let me look at that on the week chart real quick. Let's see what it's doing on the week. Where's the week? Oh, matter of fact, let me throw. Let me check something real quick. Yeah, a little light. So we kind of slowing up in here. All right, we're still not in an uptrend. We haven't tried to reverse, right? So we haven't really bounced. I know we haven't gone anywhere, but this to me is not a real bounce. We're just kind of in a holding period. We haven't fallen. We haven't really made a move up. All right. We just haven't. So I mean, this one has, let me see, what percentage is this? Once again, broad market has, and that's how you need to compare your stocks too, right? You see how I keep going back to how much S&P fell, 25%. This is down 50%. S&P down 25. This is down twice as much. That tells you it's twice as volatile, right? Without even looking at its beta coefficient, which is a fundamental number you can get off Yahoo. You know, all these different. They usually go back and give you a 5-year beta. Beta is a number. It just tells you the stock market is 1. S&P is 1, right? If the stock's beta is like 2, that means it's twice as volatile, which means if the S&P drops 25%, that stock can drop an easy quick 50, right? You need to know stuff like that. So that's why I keep going back to these percentages, because those matter, right? If the S&P drops another 10%, you already know what's going to happen to CRM. It's coming down. All right. Charles Holland said, what's your take on NQ firing to the downside on the month chart? Last time that happened was August 08. Charles Holland. See, Charles, you one of my I'll say me and Joe. You one of our loyal, faithful. You watch. I know you be digging in. You know, you taking classes with me. So that's the type of question tells me. I instantly can tell how in tune the trader is just by the questions. And don't get me wrong, I'm not saying there's a bad question. No, I'm just saying that's a question with some meat on the bone. So I love that. I'm gonna answer it. Let me go to XOM real quick. Exxon Mobil. So this is Exxon Mobil month chart. Well, you see. If you don't see it, now you already know oil is up. everybody and their mama know oil is up, right? Because we feel it. Prices of anything that needs gas, airplanes, cars, everything's up. So in an uptrend, looking at the month chart. Now June's interesting because we did break the high. We broke the high of May, but we still right now, once again, this is why I'm always talking about ranges, right? It's like we're just inside this range. All right, so holding period, strong pullback, right? But didn't break this candle yet. And didn't break these lows, didn't close lower. What's today? Today's the 5th. So starting to push down, but we're sitting right there at the bottom. If we break this, where is that? 80, 82. If we break 82, it doesn't mean we're going lower, right? Because if you think about just what's happening fundamentally, unless they do something, I mean, there's different plans I've heard from Biden, some other stuff I was, just looking at. But unless there's a catalyst, oil prices don't you might want to think about ways to keep your gas prices down and be strategic on how you travel and all that stuff, right? If I go to the where's the week? If I go to the week chart real quick, look at that. All right, so this week right here, ooh, hammer at the top, screaming, ooh, a lot of push up, right? Bears won that week, even though it closed green, right? We pushed up from what 100 to 105 and then pull all the way back, right? So that's a nice pullback at the high. That's like picture perfect classic market reversal candle telling you we should, if we break the low of this candle, come back down, right? And that's all we did, which is why we had this very strong week here, right? If I see this week, I'm getting out. I'm gonna put my stop loss under here. You know what I mean? Like, this ain't the week you really want to hope it keeps going up after seeing that candle. All right, so we pulled back. Last 3 weeks are just kind of, a little rangy, but we're still inside that month chart. So, um, yeah, we're in an uptrend, but right now in this moment, ranging. Week chart trying to get some steam, trying to push back up. Haven't really done anything. Just kind of sitting there. Yeah. So I would say this in a real simple way, right? We have to. I mean, think about it. Just real simple, like one-on-one stuff, right? For us to go higher, we got to get above these last 2 weeks. We got to get at least above 94. All right. We got to get to 94. And even if we get to 94, we still can we get through 98? Right? Because as I showed you, we'll get stuck inside of a range of a really bad week and we'll try to go. But if we don't get enough buyers, all right, so hitting 94 doesn't mean we're going to just cruise through 98. We might just test 98. We might test 94 and drop. All right. But once again, right now, fundamentally, it's in an uptrend. So, you know, different than CRM. All right. Let's see. Where am I? Where am I at? Lavanya said I can't count. I always tell people, I'll give you 2 stocks. She said Tesla, Apple, AMD. I'm gonna do Tesla and Apple. Tesla. I'm gonna do Tesla and Apple. All right, so let me get rid of all of this. Okay, Tesla. I know it's Tesla. Some people say Tesla. I don't know why. Whatever. I'm gonna say Tesla. It's ass. I know they're with S's. Whatever. So Tesla. This was the candle right here. Your eyes should instantly go to. It was November. I keep telling y'all, this whole move that we're in now, it started in November. If you just knew what to look for and you were objective enough to say, this doesn't look good. All right. So we got a doji candle. It's a sign of confusion. It's a cross. Market pushed up, market pushed down. We closed kind of equilibrium. Right. We closed where we started at that month. We pushed up, we pushed down. Bulls won, Bears won. Everybody gave their money back. We're right back where we started. Right. Last few months. Peep this. We did have a little range with this candle right here. I'm gonna draw it over these two. But I'm gonna put it under this one right here. Sorry. So this candle right here, which was October, super strong month. That's when we made that big move up to 1,000. Right. Folks were buying the stock. We bounced off that bottom around 800. We pushed back up to a G. We came back down about 750. We pushed back up right in there. Last May was a tough month. We made a new low, kind of right, pierced 600. Which, I mean, if we drag it all the way across, right? So we got some, got some support up in there, like 600, 700 range. Like that's where people are buying, feeling like they're getting real good deals. But, if we just get rid of all this stuff and I just look at what we're doing right now, right? So you got this candle here, month chart, ugly. Right there under this range. So we pretty much, when we got back to 760, I was kind of like the market, or at least Tesla, giving back all this money it had made from basically 700 all the way up to 1250. All right, we closed there. We tried to go higher. Doji, We pulling back, pulling back. Oh, bounce, got some support, right? So we bounced off this 800, pushed back up to 1100, right back down. All right. If I go to the week chart, um, yeah, the week is bearish. I mean, you already knew that, but all right. So the week is bearish. We're getting this. Yeah. I mean, it looks just like the S&P, just like Nasdaq. Just getting these little bounces. All right. So even right now, if you pay attention to this last down move. All right, look at this right in here. This, what is that? 516. We're just ranging in that week. We haven't really gone anywhere. All right. Tried to go higher. Open there, drop. Came, hit that bottom, 625. Didn't go any lower. Push back up. So same basic kind of premise, you know. Eventually, one of these candles will close above or below, and we'll probably continue to go that direction. All right. Let's see. What else? And I'm right now. I know I'm like super technical. I'm not even talking about like, it's not a ton of folks like me who do this, but I'm just, I love the technicals. I sometimes forget to talk about the fundamental side, like what's going on. I know that's sometimes a little more easier to relate to, but if you can't do this, I don't give a damn what you know. All of that stuff doesn't matter. You won't know how to buy, when to buy. You know what I mean? Like the technical is what makes you money. The fundamental is what guides you to what you should be investing in or trading, right? So there's a piece of that matters, right? If you're investing in Apple, you should know some things about Apple. How many business segments do they have? Where does most of their money come from? What drives the stock? Right? You should be able to give me some numbers. And when I say numbers, I literally mean if I went to Yahoo Finance right now and asked you about free cash flows, PE ratios, gross profit margins, revenue for the last quarter, estimate for the last quarter, just stuff like that. If you don't know that, come on, y'all. All right. So I want you to be educated. But even if you didn't know all of that, the charts still really gonna tell you everything you need to know. I just shot myself in the foot, but I love the technical side. And I got an MBA, right? So I got my MBA. I mean, I clearly I could go that route, but it's boring. Nobody wants to talk about that side. We really don't. They do that on Bloomberg and all the channels. mm, But for me, showing you guys this stuff has always been it's easier to digest. You know what I'm saying? It just is, right? So this is good old Apple. Apple. So I got to go back to September. We had a really, really, really nice range back in September of 2020. It took us 3, 6, 9, 10, 11 months to get out of that range. September. All right. Toughest months of the year, September and October, right? So September put a whooping on Apple. And it took us as buyers, as investors, it literally took 11, almost 12 months for Apple to get that next bullish push of volume. Think about that. 11 months. Like for it to really move. 11 months. All right. November, it started to stall with everything else. We had a couple candles right in here that just really didn't go anywhere from December to January to February to March to April. We really didn't. We're just dancing. We kind of just, we kind of bouncing off 160. All right. If I drew this line right there at 160, look at that. We poking 160. Poke, back up, back up, back up. Trying to go low. We finally closed under 160. All right. I mean, everything's down, so you already know what I'm gonna say, but I'm gonna get rid of all of that stuff really quick. All right. So we're still bearish. We are under the 8-period moving average. We're under the 21. The squeeze is bearish still. We're still just down. Right. And if I drew one more little box just for a little bit more clarity. All right, look at this right here. All right. So this week of 516, we pushed back up to the high of that week, 149. We tried to break it. Oh, didn't get enough buyers. Bears pushed it right back down to the low, but we didn't really we didn't crack and fall through. You got more buyers getting in here, right? This is just that tug of war back and forth. All right. So once again, closing under this range doesn't instantly mean we're going to go. It's almost like you want to see a close and then it continue. All right. So you want to see it close under, and then if we start pushing under that candle, yeah, it's probably another, right. That's usually like the second wave. That's the next move kind of coming, right. So we're in a range. We're stuck. Everything's bearish. Could we go bullish? Could we attempt to and let me say this too. We don't just go straight from bearish to bullish. We really go bearish, reversing, building momentum, then we're bullish. Right? When we come out of these bullish markets, as I showed you on NASDAQ, going back and forth on NASDAQ and S&P, we didn't just go from an uptrend to just instantly down. The market gave us like 3 November, December, January. It roughly gave us 3 months, right, of a heads up before the downtrend in January, which really confirmed in February, truly got moving. Should have saw it in November. I was talking about it in November. I literally was. Okay. Charles Holland. Where's my thing? Where's that thing? Let's pop this up for a second. Okay, there we go. Charles Holland said, "What's your take on the NQ /NQ is NASDAQ futures?" So that's a little advanced for those of y'all who's like, "What the hell is this backslash?" It's just futures. All the futures contracts start with a backslash. So he said, "What's your take on NQ firing to the downside on the month chart? Last time that happened was August of 2008. My man. Okay, so let me get rid of this thing and let me go back to my charts real quick. And let me take your comment off. And then let's go to NASDAQ real quick. Matter of fact, let me see. QQQ. Blah, 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 blah. Which one is it? Which one? Wait, what did he say? What was that question, Charles? I forgot the question. Oh, financial downside on month chart. 08. Okay. So let's do that real quick. Let's look at NASDAQ. Not the futures version, just basic NASDAQ, right? The ETF, right? Oh, and then month chart. Month. Okay. Good Lord. If the people don't stop texting me right now. Charles, when you say, I want a little bit more detail. When you say, what's your take on NQ firing to the downside on the month chart? How are you defining what's the technical? What are you looking at that's making you say we have fired to the downside? Right? You know how this stuff is. It's super technical. I need to make sure I know exactly what you mean, what you're looking at. Right? Because different indicators, different. Right? We could go all over the place. Okay, on the squeeze. Okay, cool. All right, so let me add real quick. Favorite indicators, TTM squeeze. That's all I'm going to add. Okay, so here's what Charles is saying. Charles is saying right down here, this indicator turned red. We got a red bar. And if you look back, when was the last time you saw a red bar? Last time you saw a red bar new red bar was back here, which was August of 08. August of 08 was before. Let me put a little box so y'all can see it. August of 08 was here. And then I'm gonna put another box on what preceded it, which was these 3 horrible months. That was the recession of 08. The last time we got that little red, we're getting that right now. So, my take. My take is unless something very just amazing happens, the market is probably probably going lower. Um, and depending upon what happens in the economy, not the stock market, but the economy, we could we could get a rewind review. Right, it could get a lot worse. Get a lot worse. So let me show you. So let me do this last thing. So oh no, matter of fact, let's do this. Let's do that. Let's do that. That'd be fun. All right, because it's always about percentages. All right, it's always about percentages. So when we got that candle back in August of '08, how far had the market golly, how far had the market fallen lowest in just that last right period before we got into the steepest part of the recession? Because these were the worst 3 months. This is when it really just that was when everything's bad. Banks closing, right? You know everybody panicking, right? So if we go here from these highs to this low right here was about 25%. We're at 25% right now. All right. After it was all said and done, those next 3 really, really wicked months dropped us another 30% down to 55%. All right. So what's my take? My take is very simple. It's logical, it's rational. It's not even my take. It's just what, I think anybody should be if you trust these specific indicators and you kind of think the way I do. Um if something doesn't happen to spur some buying in a major way, we're probably going lower. How far could we go? We can drop another 30%. Where would another 30% drop take us? Right back to the COVID lows. Complete reversal of all of that money that was made. All right. So if I had to show you, that would be this. That literally would be this. Be coming back down there. That's another 30%. And unfortunately, some stocks like Netflix, right, have already done it. So like, don't think it's not possible. Now, I don't want it to happen per se. You know what I'm saying? Like, I don't want it to happen for the rest of the world, right? But COVID's low. COVID was right here, right? So COVID's low for Netflix. We're already under that low. We're under the lows from 2018, right? Netflix, was the number one best, the highest, like 6,000 some crazy percentage return from the recession. Literally, there's nothing that beat Netflix coming out of the recession till that high of 700. Nothing, not a stock you'll find, and it fell super hard, super hard. Matter of fact, I'll give you this one last number because y'all know I love getting into these numbers. You just gotta know these percentages. We dropped about 78%. That's crazy. 78%. 78. I might as well just bump it up. 80%. We dropped 80%. So, what's the moral of the story for the day? Recessions happen. Long-term investors always win. We had 20 something bad months back in '08. We slowly started to reverse. Then we got some sting. We got into an uptrend. We virtually had a bullish market for 12 years. December of 2018, Trump was doing some crazy stuff. Japan's market had some real strong pullbacks, like 40-50% recession type stuff. Affected our market. It's global. It's all connected. We bounced back out of that. Trump was impeached, I guess, the one time, maybe twice. I don't know, whatever. COVID happens. We don't know what this thing is. Markets panic. We come back down to those same 2018 lows. Then we have literally like 18 months of nothing but the most amazing uptrend you guys are seeing. We've seen in the last 30 years. And now it's over. Right. So these are just cycles. So right now, yeah, it's just the trend is down. And if we continue to push and go lower, it's only going to speed up and accelerate because more people are going to panic. When you should be poised, you should be calm. If you're an investor, stay long. By default, you're long, you're bullish as an investor. Best returns come after the biggest losses. You should be excited. You're getting everything on sale, right? But what companies are you buying? Because every company ain't a good company. Just because it's down 78% don't mean it's a good company. Don't mean you should buy it. Right? That's the tough part. That's the tough part. If you're a trader, we go into a recession. I ain't gonna even lie. If you're a trader and we go into a recession, I hope over these last 2 years you've really developed some skills because you can come up during a recession. I ain't gonna even lie to y'all. A little part of me hopes we do go into a recession. I hate to say it, but the trader in me does. Why? Because markets are fast and volatile. And if you know how to short or buy puts when recessions happen, all we doing is going down. It's the exact same reverse of when we had these crazy bullish markets. All right. So once again, trend. There's a hell of a lot more. The psychology I could talk about for days, all that stuff. But I'm gonna end here. Thanks for watching. Oh, I had a I got some sounds loaded in this thing.
Told me to tell you.
Uh-oh. I ain't gonna even let him get that out though. So thanks for watching, man. I just always try to give you guys some good perspective. Yeah. If you're insider trading, stay tuned. As y'all know, I love to run live classes. I probably have 2 more in me for this year. They get better every time. This last options and futures, because I did a 8-week futures class and options class, but I had some little medical stuff that happened in between. So, they didn't get the per se the best from me just because of those medical things, which I can't control. But I feel good. I'm healthy, man. And ain't nothing like major, right? Just some back stuff, sciatica, sciatic nerve, all that stuff. But yeah, man, I'm feeling really good. I love what I do. So thanks for watching. Share this video with somebody that you know and that you love that needs to start taking this market serious, right? To protect your family, to build some wealth, to build some side income. You have to be an investor minimum. And if you're over 30, you need to learn how to trade options. If you're over 30 and do not know what a call or a put is or how to place a trade, you're not benefiting from living in the greatest economy in the world right now. That's the point. You're here. This is it. This is the country that the whole world right now. Japan is on its way up though. In like 30 years, we all gonna be speaking Japanese. So let's see. Kevin Bowie, what up, bro? He said, what's the next class? Although I wasn't present for all of them, I appreciate the knowledge you provide. Yeah, man, I appreciate that. Oh dang, I didn't mean to cut that off. I'll probably be doing an options class as well as a futures class again. I like that combination. Some things I could have done better. I'm gonna just, I try to get better every time. You know what I'm saying? And don't get me wrong, when I say I could have done better, I just mean like my health. I had, I just had a few classes. I couldn't sit up. I literally couldn't sit up, so I hate when I have to push stuff back, but I'm feeling real good. And what I taught, same stuff here, fundamentals as well as advanced, best tools in the world. And once you learn how this trading game works, and you get patient enough, and you get the skills, you get the emotional discipline, you get the mindset right, it's limitless. It becomes limitless. How much you want to make is up to you. All right. So stay tuned. Charles Holland. Yeah, stay tuned. I'll let you know. I'm kind of getting dates narrowed down and all that stuff because, my whole focus when I'm doing live classes becomes my class. You know what I'm saying? I want to try to give as much, to my students. So just kind of tweaking a little, some stuff, all that good stuff. You know how it is. Trying to make it better. Take in feedback. I accept criticism with, But love what I do, man. I got a lot of students making money from these, last few classes. So I'm always happy to see that. Always happy to see that. So this chicken is so good. I gotta go. Thanks for watching. Love y'all. Peace. Share with somebody. Go to the YouTube channel. Subscribe. I'm gonna see y'all when I see y'all.